Thanks very much. Good morning, everyone. Thanks for the introduction. I am going to look at the outlook for UK construction, also talk about what's happening in the UK economy at the moment. As I'm sure everyone is aware, we have the looming spectre of a British exit from the European Union, so it's interesting times for both the UK economy and the UK construction sector. I have to say, when Tom asked me over, we chatted about what I should discuss about 6 weeks or so ago, and I said, yeah, I'll mention Brexit, sort of thinking that it was a outlandish possibility, but, well, unfortunately or fortunately for economists being more in demand for their opinion on it, it looks like it might actually happen. So I'd say I put a big caveat on everything I say, that forget it if Brexit actually happens, because it's almost like we're in year zero in terms of where the UK economy is. Anyway, so I work for Barber TBI. We provide construction market intelligence for all construction leads in the UK market. Myself personally, I'm responsible for our market analysis. So I work with the Office for National Statistics, who we provide data to. We provide new orders data to them, so we get sort of early look at what the trends are within UK construction, and by extension what the opportunities are for contractors both in the UK and obviously in Ireland too. And today, like I say, I'm just going to give an overview of what the current conditions are in the UK economy, and then move on to talk about the construction sector more specifically, just to give you an idea of where it lies, really, where it is in the development cycle. So what I would want to say, I think, to stress about the UK economy is that we had really strong growth post 2013 and 2014. The economy grew about 2.9%. and that's above the longer term trend of 2.4%. So really strong 2014. 2015, I think, was expected to be another really strong year, but growth kind of pared back slightly to 2.4%, so about average. So I think we certainly had a lot of momentum in 2014. It dropped slightly in 2015, and in 2016, the start of the year has seen lower growth again. Of course, a lot of commentators have attributed this to the potential Brexit impact, where investors are putting off decisions to wait and see what the outcome of the referendum is. Personally, I don't think that is necessarily the case. I think it was just a slightly slower first quarter for a myriad of reasons. Actually, the start of the second quarter has seemed, conversely, actually quite strong. But I just wonder now that the opinion polls are so close, whether the data for May and June will actually see as will be the Brexit impact rather than the first quarter. If it's going to be in evidence, it will be in evidence in subsequent figures. Just brief background really to that pattern of growth since 2013. It's been mainly driven by the service sector. So this graph shows, if we take the before the recession as the base level, and looks at the different sectors within UK economy, it's the service sector that's driven growth. It's about 12.5% higher than before the recession. Compare that to construction, it's actually still about 4 or 5% lower than the boom times, sort of pre-recession. So while construction, and I'll go on to talk about this, has performed well, it's essential to put that in the context of the rest of the UK economy, where it really has been the service sector that's been the driver of that economic growth. This graph, again, just to emphasise the point about the nature of growth over the last 2 or 3 years in the UK, it's been very much driven by consumer spending. We're a nation of credit junkies, essentially. This graph shows the black and the blue lines show the net savings level, so how much are the UK consumers actually spending as opposed to saving. And this bottom line, which is the actual cash saving ratio, the lighter blue line, shows that, of course, during 2008, consumers stopped spending, started saving more as they worried about the wider economic performance. But over the last couple of years, as economic growth's improved, confidence has improved, so has savings. Though I would note that last year in 2015, I would note that slightly ticked up. So that is, we're still spending, but not at the same rate as we were in 2013 and in 2014. I suppose the star performer of the UK economy has been our labour market. Unemployment peaked at around 8.5% in 2011, 2012, and I think at that time, before the economy started to grow again, there was real worries that we were, or the UK economy was going into a pattern or a phase of longer-term high unemployment. But as the economy picked up, the UK has got a fairly flexible labour market. Unemployment actually dropped sort of precipitously through 2014 and has maintained the level of about 5.1% over the last few months, which economists would describe that as almost the right balance between the churn of the labour market and they talk about full employment. You'd struggle to get down anything more than 5% unemployment, in my view. It's also been driven by a change, I think, in the dynamics of the labour market, whereby we've seen more people in the service sector lose jobs, employment, traditional jobs, but a more move into self-employment. So you might find consultants that used to work as part of a firm have went and now set up on their own. That's been a real trend on the back of the financial crash, and I think that's probably something that's here to stay in the UK labour market. I won't talk too much about that. I want to move on just to cover, as I said at the start, the spectre of British exit from the European Union. And basically, I don't know how much people have been following it in this country, but certainly in the UK, what is a pretty complex economic trade argument has been boiled down to either from one side saying the land of milk and honey awaits, or the other side saying Armageddon awaits. So quite frustrating as an economist trying to follow this debate, but we are where we are, and politicians have deemed a referendum to be the way they want to go. So that's the level of debate. The other thing that's thrown sort of a real cloud of uncertainty over the Brexit is the opinion polls. Now, this is one of the few things I actually found useful on Twitter, but someone put on the difference between the opinion polls between who's saying leave and who's saying remain, and literally up until maybe last week there was no pattern. One opinion poll would be saying that it was the leave camp that are significantly ahead, another would be saying the remain camp. So that's just fueled, not only is there uncertainty about what would happen if there's a Brexit, there's also uncertainty in the markets and businesses as to actually where public opinion lies. So it's kind of thrown a bit of a curveball into the narrative about how the UK economy is performing. But and I'm as clueless as everyone else. But actually, these are the real opinion polls, and I think there's about 2 or 3 polls every day, so it's probably changed from the time I got on stage. But I think if you look towards the bottom of this table, the green is likelihood of remaining. So we had a slew of polls sort of middle to the end of May that were very much suggesting it was going to be remain. But then since the middle of May, it really has been take your pick. Blue is obviously exit. So, over the last few days, it seems to be crystallising that the leave camp are the ones in the ascendancy, but with 10 days to go, 2 weeks to go, that, it's sort of anybody's guess as to how this is going to play out. And I suppose my view on Brexit is that it is going to fundamentally change how the UK economy performs, and by extension, it's going to have an impact within the construction sector. Our sister magazine, Building, ran a poll of I think about 1,400 businesses in the construction sector, and about 70% of those companies wanted to remain. And the main reasons for that were based on where labour comes from in the construction industry in the UK. tends to be from Eastern Europe essentially, and we, as I'll go on to show, or the UK rather, has had a really strong upsurge in housing construction in particular. A lot of that is actually facilitated by labour from Eastern Europe, so there is an argument to be made that construction is particularly at risk from a British exit from the European Union. So I think that is the sort of main takeaway from Brexit. I cannot forecast whether it's going to happen or not. I've got a hunch that just at the end, Remain will win out, but that will not be the end of it. It's going to frame the UK politics for the next 4 or 5 years. But I could be wrong, and you could invite me over next year, and we could be out of the European. I might need a passport to get in here. So yeah, but we'll have to wait and see. In terms of the construction sector, then, similar to the UK economy more widely, it had a really strong upsurge in 2013, and that was sort of sustained in 2014. I think the industry grew by about 8% in 2014. 2015, we didn't quite have that same momentum. Growth fell to about 5%, I think, and it kind of feels, I was saying to Tom before I came on the stage, that you guys are the Irish construction markets, maybe where we were in 2014, going through that really strong growth phase. And while there's still strong growth in the UK construction sector, it's hard to maintain. Certainly, the UK experience would be that it's hard to maintain that type of growth because, quite simply, it's hard. The construction sector, certainly in the UK, realigned itself to what it, I suppose, thought was the new normal, i.e. the demand conditions post the economic crash. And it takes a lot longer, I think, to get back to the levels of output that we saw in 2006, 2007. But that said, it's still fairly strong demand conditions within UK construction. Similar again to the Irish market, it seemed to be that most of the activity happens in and around County Dublin. We very much have the same. London and the South East are the main locations of activity for UK construction. I think about 40% of total output was in London and the South East, and this is for the last 12 months. So that gives you an idea of how dominant London is, and that's of course where the majority of construction opportunities are. This graph shows our contracts awarded, so we track the value of contracts that are awarded month to month. And what I want to pull out here is that even though in terms of activity in the ground, the output was lower at the end of 2015, we actually saw a real upsurge in the contract activity, so the value of contracts. And I put that down to, particularly in the commercial office sector, more investor appetite for large value, sort of big ticket projects. So, you've got big multi-story sort of commercial office blocks within the City of London. Obviously, they're always going to be attractive, but there seems to be more investor appetite for those kinds of projects. And also, the UK construction sector has a big offshore wind farm. So we almost seem to have placed ourselves at the forefront in Europe of locations for offshore wind investment, and that turbine, and these are big items. So they've came through in the figures, and hence we saw a really strong end to 2015. The caveat on that would obviously be they've reached contract award stage. Whether with Brexit, etc., the uncertainty at the moment, whether these actually break the ground is, again, that's something that we'll have to wait and see. But certainly it gives me confidence that there's enough demand in the market to sustain the sort of levels of growth we've been seeing recently. Quickly then, just talking about where the value of the contracts have been. I think I alluded to this earlier, but the residential markets where the majority of contracts awarded have been in the last year, residential accounted for 29% of the total value of contracts awarded. Actually, I think if this graph last year, it was resi was higher, it was about 34%. So infrastructure has actually had a much better past 12 months, so it's now 25 and 29%. But here is the sort of drill down of those figures in residential. And what you see is we've actually had, it's a bit of a mixed picture. What we saw last year in the residential sector is a market that's very sensitive to political changes. So we had a general election in May last year where each party had very different approaches or attitudes to housing policy. And as I've sort of tried to bring out in this graph, the general election, you see both the values and the number of residential units almost, they fell quite dramatically as uncertainty came into the market. And the end of last year saw that almost like that pent-up demand from the first half of the year play out with a really strong end to the year. Now, this graph only goes up to March this year. It would have been perfect if we'd seen a continued decline in the first 6 months of the year, and I could have come here and said, yeah, that's definitely the Brexit effect, but we haven't seen it. So I guess what I would say is that while Brexit will obviously affect the overall confidence of the economy, what I think the residential sector shows is that it's more susceptible to sort of domestic policies as opposed to wider European policies. So I think that's maybe the one sector that, should Brexit occur, would, because of the guarantees that the UK government have made to continue to build the right number of homes in the UK, that I think that the residential sector actually might be, on the demand side, might be more buffeted from a Brexit. That's not to say that the issues would then come on the supply side, because the questions would be, where are we going to get the employees to actually build these houses? So, certainly demand, I don't see that being so much of a demand issue. Infrastructure, again, is a pretty crazy sector in the UK. We tend to not build much infrastructure, then sort of moan about it, and then go through a period where we sort of build a lot, really. And I think the back end of last year was one of those periods where we started to build a lot. So we have a big project called the Thames Tideway Tunnel. Some contractors in the room might be involved in that. Essentially, it's building a new super sewer within London. It's a £3-4 billion sort of project. So these are the kind of big ticket items that have a real impact on the figures. So companies that are involved in infrastructure in the UK at the moment are seeing good demand for their services. So that's a sort of improving sector, I would say, and it tends to go in peaks and troughs. We've got another couple of big infrastructure projects like HS2, which is building high-speed rail between London and the Midlands. These are big transformational projects that will have a real impact on the infrastructure sector. So I'd say that the prospects for this sector are fairly good in the UK. Commercial and retail, again, the investor sentiment seems to be better in commercial and retail. It is a bit up and down as I look at this graph, but last summer, again, post-election, there was a sort of upsurge in investor confidence and hence contract award activity. This year, there has been a weaker start to the year. I think if there's any sector that's going to be impacted by Brexit, commercial and retail is the most likely one. I'm being told to wrap up here, so I'll just quickly say that the outlook for UK construction growth is still positive. Growth is forecast for 2016, but the pace is moderating. Brexit is weighing on investment decisions. I know that anecdotally rather than seeing that in the figures. My hunch is that we'll see that in the figures to come, not the figures that have been. But the caveat being, if we remain in the European Union, the pipeline remains strong. Residential will continue to be the major sector. and the renewables industry, the offshore wind, I see that continuing to be the, providing a number of opportunities for people that are interested in the UK construction market. If anyone wants any more information, come and grab me. I'm happy to chat through it. Thank you very much.